right. Welcome to the podcast. Welcome to the Value Investor Chatter podcast. My name is Becco and my partner, Hari.
Hello.
All right, everybody. Welcome back again. And I promised we're going to be back, and we are back. And we're going to continue this for forever, right?
Yeah.
We're gonna be coming at you with some good content. And today, right at the hills of this earnings announcement from Southwest Airlines, we thought it would be a good opportunity to actually talk about the Southwest Airline meltdown that happened over the holidays. So let's just jump right to it, Hari. Tell us a little bit about Southwest, and most of you know what it is, but for those of you who are listening outside of the country, I know there are a few out there. Hari, can you take us through what they do, and then tell us about what happened during the holidays?
Yeah. So Southwest Airlines has been around for 50 plus years at this point. They're in domestic and international airlines, but they started out for the longest time as a domestic airline in the United States. And their kind of approach was always a little bit different. They started going between short stops between small cities like Houston and Dallas and Texas. And, they've always kind of stuck to no flight is longer than 2.5 hours. And if you go back through our archives, you'll listen to us. We talked a lot about how they were very focused on the bottom line. They would only fly 737s. All their pilots could hop between one plane or the other because they were all flying the same planes, unlike, big carriers like Delta and United, that have big planes and smaller planes. Southwest always had a 737. And they also really focused on a lot of sites like Long Beach, California, or Lubbock, Texas, where there wasn't a lot of airline love, for the lack of a better word, from other, from the big carriers. And then they just grew because everybody really liked their model. They were generally very affordable. And so, their previous two CEOs previous, Herb Kellerman was kind of like this idol amongst the business community because of his great work ethic. They had a great corporate culture. Employees loved working at Southwest. And then he stepped down, and his the previous CEO really focused a lot less on capital infrastructure. So part of Southwest's quirkiness is when you may get on a Southwest flight, and that flight is one plane that's going between 7 different stops during that day. And you're just on one leg of the plane, and you may have to get off and get on another plane to go to the other stop that you're looking for, and so on. But this kind of is very different from Delta or United, who, if you're trying to fly through United or Delta, you may have to go through Atlanta or Chicago, which are their hubs. Southwest, it's basically these short haul flights throughout the country. So why that is good is it allows them to target some of these smaller areas without having to go through a big hub and spoke model. But it also creates a logistics nightmare of, if this plane doesn't show up in Houston at 3 p.m., I have to have another plane ready because there are people in Houston that need to get on a plane to go from Houston to New Mexico, right? Or wherever their destination is. So ultimately, this creates kind of a problem if you have a giant snowstorm that hits the country, especially during a very busy travel season like the Christmas holidays, which happened a month ago at this point. And so what ends up happening is planes that were supposed to be in different locations are no longer there. You have pilots all stacked up in the cities that they live in. They can't get to the destination they were supposed to because they were stuck in this snowstorm. And so you have this mismatch of airplanes in one place, pilots in another. You have your flight attendants also not available to you. And because of all of this, their software could not handle all of the load because they fly so many thousands of flights, and they ended up having to cancel close to 20,000 flights as a result of it during this outage. So you can imagine there's a lot of people that were really, because other airlines had outages, but they weren't nearly as bad as this one. And so this all stemmed from, we'll get into that in a minute. I'll stop there to just say that, we've kind of set ourselves up for a fairly significant um, problem, because there are a lot of people who may not, Southwest always had this reputation of being, the friendly skies and all of this stuff. Um, Actually, that friendly skies one was Delta, but that just tells you how bad the marketing is. Um,
Well,
but
yeah,
the real problem here is what happens to their customers. Are they going to come back? And then we'll talk about a little more other issues that we're going to run into.
yeah. I think that when I think about Southwest, I think about love, right? I think there are two things that stand out to me when I think about Southwest. It is the operational efficiency that you don't see. I mean, this is famous Warren Buffett and Charlie Munger's quote. When you go into airline business, you're going into it expecting that you're going to lose a lot of money and the margins are going to be very, very thin, right? And so Southwest, when I look at them versus other airlines, what stands out to me is number one, the different model, like you talked about there. Instead of hub and spoke, it's a shorter travel, it's a shorter timeline. Therefore, you don't have to have all these different planes and all these different types of pilots that can fly these different planes and different, different hubs and things like that. It's a very short hop. When I first experienced Southwest when I was in high school, I rode Southwest for the first time in high school because it was a cheaper option. It reminded me of going and taking a bus, like a Greyhound bus or something like that, because it feels
Yep.
just like it. When you show up, it's like there isn't an assigned seat. You just walk in and sit wherever you want. And it's just like a bus. You go and, it's like 2 hours and then you get off and then get on another one. And all this to say, I think when I think about Southwest, it's about this new model that they were really able to innovate on. But the problem is, and maybe this is a terrible analogy, but I'm just going to say it. It's just like through COVID, how we got to understand as a society the fragility of just in time delivery and just in time manufacturing. This, perhaps, is an analogy in the airline industry of just in time arrival, and then everything else cascades downward from there. If one
Yep.
thing in the domino falls, I mean, the whole thing falls. The downstream consequence of one single airplane not showing up, I'm sure they have built in some redundancy there, but
Yeah.
to what extent? So I think I think about that. And another thing I think about when I think about Southwest is the culture, like you mentioned. I mean, their ticker symbol I think is LUV, right? Love,
Yep.
and their main kind of HQ in Dallas. They have Dallas has an airport called Love Field, and I think
Hmm.
that is funded by Southwest. So there's this whole culture around Southwest, and people love it. I personally really like it. But let's jump right into the earnings because this meltdown happened over the last quarter, and let's actually get into some of the numbers before we talk about what is the long term repercussion of this. We'll talk about that in a bit. So, Hart, can you walk us through the recent earnings that they just announced yesterday?
Yeah. So what we had with Southwest is, this has been a profitable airline for the last 20 years, 20 plus years. Um, Not super profitable, but um, you know, in the last 5 to 10 years, they've actually been done a great job of maintaining profitability and so forth. So this quarter has been somewhat of a disaster because of all of the things that we already had talked about them having to, uh, cancel a bunch of flights. But in order for them to also maintain good relationships with customers, they're giving away a bunch of free flights. So they're going to be adding a bunch of liabilities onto the balance sheet because these are flights that haven't been taken, but they have owed to people, right? Um, so when we actually look at their things, one of the funny things about how Seeking Alpha kind of presents information is uh, they talk about things based on purely on the analysts' way, expectation versus what was actually occurring. But putting that aside for a moment, you know, everything looks somewhat deceptively good for Southwest when you consider their revenue was up 22%. But then going back to a year, remember, this was beginning of 2022 when there was still a very large COVID overhang, right? And flying had not been something that had picked up, in a significant way still, right? So they're coming off of a very low set of expectations to begin with. Uh, so, they have a large earnings per share miss um, as a result of this press release or as a result of this earnings call. So what in my kind of mindset, whenever we start talking about these kind of earnings and things like that, you have to really start digging into what is actually the underlying factors. Is this a one-time problem that Southwest is going to have? Is this going to be an ongoing issue that is going to cause problems going forward, right? So we've already identified several issues. One is they have a giant liability that they're giving people free flights, right? So this is revenue that's potentially in the future that they could have booked because people would have been flying. They're giving it away for free because they have to make up for, this, right? So that is something that is going out into the future. Two, we haven't addressed our technical problem here, right? Which is the software that they use to schedule all these flights is 20 years out of date, right? According to reports that I've read and people that I know who worked at Southwest or currently work at Southwest, is a big problem. But one thing I would say about that is we don't know how much it's going to cost for them to invest in infrastructure. But one of the things that they've done over the last 20 years is put less money into that software. We don't know how much it costs, but they were essentially allowed to juice their profits a little bit by not investing in the infrastructure side of the house. So, and then I'll share one more aspect of this that has me a lot more worried than even the stuff that we've been doing, which is Southwest airline pilots are all in a union, right? And when we discussed Southwest last time, we never thought there would be a problem with their union, with their employees, or with their customers, right? But now they've created two big threats, to and that's part of our checklist. So if you don't have a copy of our checklist, I'd encourage you to go to valueinvestor.org, sign up for our newsletter, get a copy of the checklist, review everything there, and then you can follow along as we talk about it when we're reviewing companies. And it would also be a great time if you want to talk about a company like Southwest. You can sign up for our community as well and have more discussions because Becco and I will be on the community later today, having a lot more conversations about this after this podcast goes up. But Southwest Pilots Union is calling for a potential strike. And I think one of the biggest complaints that they have is, obviously the infrastructure that was somewhat problematic. The software failed, and then they started trying to book pilots and flight attendants to various flights using the phone. And so this creates a giant nightmare because nobody on the phone is going to be able to actually book them in, right? But if this strike is an ongoing problem, Southwest is going to be grounding flights not only in regions, but it could be grounding flights across the country. And that to me is a very, very worrisome thing. But on top of this, one of the ways Southwest could easily cave to their pilots is to pay them a lot more money. And if they do that, then that's another part of this operating expense that could significantly hurt them. Mm-hmm. So I'll pause there, Becco. I mean, what are your thoughts here?
Yeah, I think you can go ahead and take down the screen, Hari.
Yeah.
I would say I think the thing that is interesting to me about this is because of this meltdown, you now were able to surface some of these holes in the operating model of the business, right? There is obviously some redundancy that needs to be baked into the cake with Southwest, the scheduling and the flight management and all of that. And then there's also this element of underspending on the tech. And the CEO came out and said that they're going to invest $1 billion in the software infrastructure. By the way, I am able to get a glimpse. Okay, you and I both spent most of our career working on software for big hospital systems, building software, being in the startup tech space. Fine, there is a lot of new innovation that's happening there, but something that I think that I underestimated, and I only recently was able to really appreciate this, was my partner. She works at EY, and she gets to work with big Fortune 500, Fortune 50, Fortune 10 companies, okay? And they're SAP and Oracle and, all these big, ERP systems, CRM systems. It is puzzling to me how anything exists at all, because you look at these systems and it's like, it's so archaic. It's
Yeah.
very old. It's really old. And there is this thriving business of selling software like SAP, for example. For them to spin up like a one virtual machine in their cloud, it takes 6 months. Okay. And so
Yeah.
like you have all these Fortune 500 companies that are building their business on top of these infrastructures. And you have to wonder, like, how do things exist at all? And I think this is no different. You have an organization that built their entire business on an old technology, and technology, I mean digital technology. And there's going to be holes like this. And in times of stress, this is where your system gets to actually see how resilient and how well built it is. And so I think that's one thing that's kind of one comment I'd make there. I'm excited to see. I guess now would be a good time to kind of pivot into the future. What does this actually mean for you and me? I'm excited to see this $1 billion investment. You got all of these, you know, pressure to the downside. Okay, as a lot of good leaders do, you have to take advantage of the crisis to come out at the other end triumphant. What does that look like? What does that tunnel look like? Where is it going? And what is this transition period going to look like? And how long is it going to take? All these big sort of questions. And so let's why don't we start with Hardy? Can you run us through the income statement and balance sheet and that sort of stuff?
Yeah. Let's take a look at. So just to so you all know, Becco and I run also provide a database of all companies and their financial statements on db.valueinvestor.org. But if you go to valueinvestor.org, you can click in to the database and you'll get there. And you can just type in LUV and get to Southwest Airlines. And on there, we have, this is all for free. You have 20 years of, or actually at this point, it's 30 years of the Southwest Airlines income statement, balance sheet, and cash flow, all easily readable and in a nice tabular format. But you can actually see from going back all the way till 1992 till the present day. In 2019, their revenue kind of peaked at 22 billion right before COVID start, and then they took a huge hit because obviously in 2020 nobody was really traveling, and they took a huge loss during that period. And they had a giant negative earnings per share during that time. But one of the things that kind of really stands out during that time period was they heavily increased their debt load to essentially to pay off. They took PPP loans, but they also took bank loans And they had to, as a result of that, from the government, those loans, they had to suspend their share buyback. So, one of the biggest concerns that I have with that is if you look at, and if you looked at our entire investment thesis going back to the original investment, was shares outstanding at Southwest Airlines from 1990, uh, well, let's say 2005, roughly it peaked at 800 million shares. And then they steadily bought back shares over the next, 15, 16 years to a low of 525 million shares. And then they actually sold shares during the COVID years to kind of prop up the balance sheet, get some cash in. So they actually, increased their share count. But one of the biggest benefits to Southwest Airlines is these airlines never got a very large price to earnings multiple. And because of that, their share count was, or their share price was low enough that any cash that they were using to buy back shares was bought back at a very reasonable price. And so they were able to retire a giant number of shares. So if you actually looked at their net income growth, it didn't look as appealing as their earnings per share growth because they had they were also reducing the share count at the same time. So one of the big pillars of our investment thesis was if they continue to reduce the share count over time, you as an investor are going to get fairly large earnings per share growth or free cash flow growth. But they've had to suspend that because they have these loans and they have guarantees inside the loans with the government that they wouldn't use any of this cash for share buybacks for a significant period of time. So this kind of rocks our investment thesis. Obviously, COVID was kind of an event that nobody really anticipated, but it happened, and so it
Yeah.
caused this problem. Yeah.
Let me pose this question to you, Hari. During the obviously, let's talk about buyback for a second. Buyback CEO's job is good capital allocation. When your
Yep.
stock price is valued tremendously high, like it was during the COVID days, because the zero interest rate policy. By the way, it's kind of crazy to think about all of these ramifications that we see right now, not just in Southwest, but everywhere else. A lot of it is downstream of loose monetary fiscal policy. Anyway, that point aside, loose monetary fiscal policy during COVID times, stock market and everything else, asset prices across the board just shoots to the moon, right?
Yep.
Okay, so we have a stock price when you're running this company and you have your stock price at just sky high. Isn't it a better idea to don't buy your shares because it's so outrageously mispriced, and because the debt is cheap right now, if you're able to get some fixed loans for long duration bonds, wouldn't you do that instead of the buyback?
So if you're proposing to take on, put in debt because it's free cash, right? At some point, right, you're going to, under certain terms, right? Debt in and of itself isn't necessarily bad if the terms are in your favor, right? So one of the terms would be interest rates. The second term is going to be the length of the bond, right? So if you look at J.C. Penney and Sears, they signed like bonds that were in the 50 and 60 year time frame at very, very low interest rates. Not a big deal, right? Because you're just basically paying interest, and at the end of that you're going to have to pay off the entire amount,
Mm-hmm.
right? Southwest took loans from the government though, and the big provisions in that loan was that they couldn't use that for buybacks. And so that to me was the day that I said I don't know why they would do this, because now as an investor, my investment thesis is Southwest is going to have a lot of excess free cash flow that they don't need to use for capital reinvestment. And at the time I thought their infrastructure would be fine and that they could then use that money for buybacks. And the end result is now they can't do the buybacks, and they have a larger capital expense than I was expecting. So now what do I do? Right? Like, as an investor, this is not as valuable as it used to be, right? That is kind of my concern about a business like this.
Hmm. Yeah, a business like this, right? Towards when you are kind of low growth, more mature industry and business, as an investor, you want to look at, okay, where is that last squeeze? It mostly comes back to the buybacks at the mature stage of the business, because you don't want them to be plowing capital back into the business to eke out 3, 4, 5% return, whatever. The buyback is kind of a central theme in some of these companies. I do wonder though that it might be a temporary thing, and then going back to 2-3 years, and then maybe they'll pivot into the old strategy here. That, to me, that's a question mark, because I don't think that I think that it is worth considering their pivot into strategy. And coming out of the COVID, they're going to invest a ton of money into IT infrastructure. They're going to take care of the stuff that's arose because of this issue over the holidays. Okay, let's get through this. And then 6-7 months down the road, when things are back to normal and the cash flow is generating and you can pay down the loan, what else do you do with the money? To me, it's a matter of a timeline. When is it going to actually turn things around? When is the executives going to implement some of these policies and different business strategies to actually turn this thing around? I don't know. I think 2-3 years, a year. I'm not sure, but I think the buyback is still in the picture. Don't you think?
Eventually, yeah. Whenever the terms of that loan expire, that allows them to go back to the buyback. My concern right now is Southwest share price has not really budged a whole lot since we saw all of these cancellations. After their earnings call yesterday, their pre-market stuff is like down maybe 3%. So there is a little bit of benefit, but I'm not seeing a huge kind of like that. This is a screaming buy, because they need to be. If we look at it, they're trading about 10 times earnings, which is what their historical average has been. If you had told me they were trading at maybe 5 times earnings, I would be a lot more, interested, right? And the reason is that Southwest is never going to trade at 20-25 earnings like some of these other companies have. And especially in a higher interest rate environment, I don't think they're going to get suddenly a change, right? So Southwest is kind of range bound in terms of the PE ratio that they'll look through. And so as a result of that, I'm not going to get super excited by any sort of business deal until I see what's going to happen with the pilots union. What's the long-term consequences? What's the infrastructure things that they're going to look like? All of those things I could get behind. If the share price came down, I would be a lot less concerned, right? But here, everything kind of has to work out well for them. They have very little room for any one of these things to go badly for them. In my mind.
Yeah, it's good observation. And then also, just a few days ago, there was this reporting from Wall Street Journal about the DOT, Department of Transportation suit, probe Southwest Airlines. I'll just read the headlines and share my screen here. Department of Transportation probes Southwest Airlines scheduling after holiday travel meltdown. Southwest says it will cooperate with requests from government officials. The claim is that they overbooked, and the quote here is that, where is it? Deceptive practice. Where was it? Here we go. Southwest engaged, allegedly, this is what the Department of Transportation is looking into. Southwest engaged in an unfair and deceptive practice by offering an unrealistic schedule. So that's also kind of a looming thing that's going to be that's going to hang over them for a little while. So just something to kind of think about there. All right. I think that was a good, thorough discussion. And as Hari mentioned, if you guys want to continue the conversation, definitely check out our valueinvestor.org community. If you go to our website, valueinvestor.org, you'll see a link to join our community. Definitely check us out there. And like Hari mentioned, we have a lot of free resources on our website. So we have our commentary on the blog post. We have the database that Hari was sharing. So we have historical data that goes back 20, 30 years for some of these companies. And it's a fundamental, financial statement data for all of these companies in the Fortune 500, S&P 500, all these different companies in the public market. Those are all free. Just check us out at valueinvestor.org. You'll see it there. All right. I think that kind of wraps things up for us. Any last comments, Ari?
No, I think we would really like it if you check us out on the web and interact with us, because that's how we can find out what kind of things you want to learn about, what companies that you want to do. If you're on our community, you can participate in some of our polls where we'll ask your guys' opinion on what companies you want to see next, what things you're talking about, so that can drive our conversations here on the podcast. So we'd really like for you to check things out. Come visit with us and grow this community.
Great. And like all YouTubers say, I'm just gonna say it. I know it's a little bit cringy, but subscribe, like, and comment.
Yes.
All right.
Do it.
That's it for us. Thank you guys for joining us. I'll see you guys next week. All right.
Thanks.
Bye.